Hello and welcome to another daily recap video with Justin Low Stocks. I'm going to go over my last night's trades. So the first trade we made was on MYO. So pre-market this thing was creating a head and shoulders pattern. Now I'll go through chart patterns in another video, but basically you see a shoulder there, which is the first hump. The second hump is the head, and then the last one, the third hump, is the next shoulder. This is known as a bearish chart pattern, which bearish means the chart is expected to go down after you see this pattern, especially after it breaks under the lows of where the shoulders and the head get to, which is this point here at 392. So seems as though it's a bearish chart pattern, I was willing to play it. So as soon as the stock opened, it basically broke down below that point almost immediately. So I went short at 389 as soon as I saw the breakdown. It broke down, bounced up for a second, came back down, and I took my profits at 371. So that was a nice safe trade. It was 4.5% return, which is a decent return. Yeah, so just the breakdown of the head and shoulders pattern is why I took that trade. And then this second trade, which was my last one for the day, and it just happened to be on the stock that I traded first, was a buy. I went long at this point here at 356, because I'll show you the daily in a second, but again, the daily showed a lot of support at this level. So I was willing to play off this support line to go long, expecting a little bounce, which we got. I was hoping for a bigger bounce, but I think I was a little too early, because we had this little bounce here I took profits into at 362, but then after it came back down, then it had the bounce I was expecting, where it came up a bit more, but I missed out on that one. But yeah, banked a little profit on there. Now I would like to show you that you can look at the price action for the whole day in 1 minute candles, and you can see it bounces around. It basically bounces off all the lines that I drew. Now this top line here I drew before the market even opened today. Same with the bottom line, I drew that before the market even opened. That's going from the daily chart and looking at the previous few months worth of price action. This 392 area was the only line I drew this morning on the day that I traded this, and that was because it had the base of the head and shoulders pattern here, so I drew that line in. But these top and bottom lines were drawn beforehand, so I'll show you the daily now so it'll be clear to you. The bottom line that I drew before the day trading or before the market even opened, I was just looking at where this price came down to often, and so you can see this bottom line, it came here. It acted as a bit of resistance here, acted as support, acted again as support, acted as resistance, shown a breakout over that resistance, which is shown by the big green candle. And that's just how you do it. You go back, and again, like, bounced off here for a second, and then that was breaking support. So you know that this price here, by looking back all the way to October to now, you can see the price keeps bouncing off that point, and that's a good point to be able to either take a long position for a bounce off, or to go short if it cracks below that point. But like I said, you don't need to be able to predict which way the stock's going. You look at the past, and you can generally get a feel for which direction the stock's going to move. And again, I did that, put that line there, which it bounced off twice in the day before the market even opened. So it goes to show you that support and resistance lines do work, and they are a good spot to take positions off, because you're only risking, if it breaks this, below maybe 350 for example, you give it a few cents extra just to give it some room to play. But you could have a 7-cent stop here just below 350. So you're only risking 7 cents, and you could have made 355 up to 389. So you could have made 40 cents for risking 6 cents. So that's a good trade, because your risk to reward ratio is really good. So that there is a good example of looking at past resistance and support lines to be able to plan for a trade. So that was my first and last trade. In the middle, I traded SHLD. So this one was a breakdown play. So it opened up in the morning. It showed a high just after pre-market. So it broke out the pre-market point here, broke out as soon as it opened. 9:30 the market opens in America in the morning. So it broke out straight away. First minute, second minute, it hit its top, and it started reversing real sharply. And I was willing to take a short if this weakness in price action went below this previous area of support at pre-market. So once I saw the stock come down and it was showing it was very weak and it came below this point, I went short. So I went short at 379, and I just rode the wave down, and I covered too early. I could have held off, but again, same as that MYO, I drew a past support line on this before the market even opened at 362, and it's normally a good idea to take your profits a few cents before that line, because normally at resistance and support points you get a lot of buyers and sellers, so sometimes you won't get filled. So I just set my profit taker a few cents above it just to be sure that I was going to get filled and it wasn't going to, you know, turn around here and bounce up straight away if I did set my profit taker down at 362. But even if I did, it would have worked out, because as you can see it came below there and my position would have been filled. But yeah, that was a nice breakdown. Just again risking off. Once it went below the support of pre-market, I was just risking off that. So if it came back above, you know, say 380, 382, I was going to cover, because it was a reverse direction. But it didn't even get up near that point after I shorted it, and it rode straight down and made it a nice easy trade. I didn't have to stress too much. And then the last trade, which is a bit of a waste, but it was the one from Friday. I was still holding. The stock just basically showed no volume all day, which volume is how many shares are traded in the day. And if there's not many shares traded, it's hard to get filled with your shares. So I don't know if you remember, if you want, look at the last recap. I was short this stock on Friday. I was risking off about 61 cents, and I wanted to take profits at 49 cents. So when the market opened straight away, it fell, which is good for me because I was short, but it didn't get down to the 49 cent level. And meanwhile all this is happening, I was also trading the other two stocks, and I was just trying to get out of this so I had more capital to be able to trade the other two stocks, which I was more confident in. But I kept setting my profit taker for this just too low. Like, it kept bouncing up and I'd set it just below and expecting it to just have that little dip back down to fill my position, but it just didn't dip. So I ended up getting filled up here at 54 cents, which was break even from last Friday. So no money, no profit, no loss, but it was more opportunity cost, because I could have, if I filled that position sooner, I would have been able to do larger positions in the other two trades that you saw, which would have made me more profits. But at the end of the day, we didn't lose any money on this, so it was good, and we had a green day, being profitable on all of my trades today. So yeah, had a good day. I'll be back at it again tomorrow with another recap video, and probably I'll shoot out a lesson video as well. Alright, well, thanks very much for tuning in. If you like the video, don't forget to like and subscribe. Follow me on my socials, which are on my YouTube homepage. Thanks very much for listening, and I will talk to you guys later. See ya.